I'm Liz Perry, the director of the Harvard-Yenching Institute, and it's my pleasure today to welcome you to the 11th annual Harvard-Yenching Roundtable. Thank you all very much for joining us today. For over a decade, the Harvard-Yenching Institute has sponsored a distinguished scholar from Asia as a keynote speaker at the annual meeting of the Association for Asian Studies. This is a way in which the Harvard-Yenching Institute has sought to showcase scholarship being produced in Asia for the North American community of Asian studies scholars. And then every year, after the annual meeting of the AAS concludes, we invite the keynoter from Asia, who the Harvard-Yenching Institute sponsored, to come here to Harvard and join us for a public roundtable on some topic of interest that intersects in some way or another with that scholar's general area of expertise. And I'm very pleased that this year's Harvard-Yenching keynote speaker at the AAS annual meeting was Professor Pasuk Phongpaichit, who is Emerita Professor of Political Economy at Chulalongkorn University in Bangkok, and is also a Fellow of the Royal Society of Thailand. We're going to do things Thai style here and refer to scholars by their first name rather than their last name, happily. And so I will introduce Pasuk by saying that she has written widely on issues of corruption, inequality, gambling, the sex industry, and much more, focused especially on the case of Thailand. Among her many books are From Peasant Girls to Bangkok Masseuses, Corruption and Democracy in Thailand, and Unequal Thailand. And she will be joined today by four other well-recognized scholars of Asian political economy to discuss the timely topic of wealth and politics in Asia. The questions they plan to cover include the following. How does the rise of a super rich stratum across much of Asia affect the politics of different countries in Asia? Are the ultra-affluent more likely to wield more influence in democratic systems through lobbying and the like, or in authoritarian systems through various means? Through what means do they seek to get their interests across politically, and how successful are they at that effort? So let me now introduce the other panelists. Sitting next to Pasuk there is Bridget Welsh. She's a senior research associate of the Huang Center for East Asia Democratic Studies at National Taiwan University, and a senior associate fellow of the Habibie Center in Jakarta, which focuses on democracy and human rights. She currently resides in Malaysia, and her research is focused on Southeast Asia, from issues of gender politics to international relations. And among her most recent volumes is one entitled Regime Resilience in Malaysia and Singapore. Next to Bridget is Devesh Kapur. Devesh is Starr Foundation South Asia Studies professor at Johns Hopkins School of Advanced International Studies, and his research focuses on the determinants of economic development and on issues of governance and the role of public institutions, including universities, with special attention to India and the contributions of the Indian diaspora. Among Devesh's many books are Diaspora, Democracy and Development, The Impact of International Migration from India on India, and The Costs of Democracy, Political Finance in India. And I'm very happy that this panel gives us an opportunity to introduce Devesh to his new colleague at Johns Hopkins. Yuen is just joining Johns Hopkins University, and Yuen holds the Alfred Chandler Chair of Political Economy at Johns Hopkins University. She focuses on China's political economy and its expanding global influence, asking what is the China model, how unique is it, what lessons does it hold for other developing countries. Yuen's award-winning books include How China Escaped the Poverty Trap, and more recently, China's Gilded Age, The Paradox of Economic Boom and Vast Corruption. And then next to Yuen is Yasheng Huang. Yasheng is the Epoch Foundation Professor of International Management at the MIT Sloan School of Management and is also the Faculty Director of Action Learning at the Sloan School. Among his landmark books on Chinese political economy are Inflation and Investment Controls in China and Capitalism with Chinese Characteristics. More recently, Yasheng has been working in collaboration with scholars in China on the role of the state in supporting technological innovations throughout the course of Chinese history. So I've asked each of the panelists to lead off with a few brief opening remarks up here at the podium, and then I'll invite them to pose questions to one another when we return to the round table there. And once they've had a chance to do that, open it up for the audience, for all of you to pose questions to the panelists. We will wrap up before 6 o'clock, and when we do conclude, all of you are invited to join us down at the end of the hall there in the Tickner Lounge for a reception to follow the panel. Before I invite Pasuk up to the podium to lead us off here, I'd like to offer my thanks to the co-sponsors of this event at Harvard. As many of you know, the Harvard-Yenching Institute is actually an independent foundation, independent both legally and financially of Harvard University, but it's located on the Harvard campus and has a very close association with the university, and we're very grateful for the collaboration of the Asia-related centers at Harvard, including the Harvard Asia Center, the Fairbanks Center for Chinese Studies, the Lakshmi Mittal and Family South Asia Institute, and the Rajawali Foundation for Asia, all of which are co-sponsors of today's event. And I would like to offer a special thank you to the Harvard-Yenching staff, and particularly to Lindsay Strogatz sitting up there in the corner, whose hard work made all of this possible. So thank you, Lindsay. And thank you to all the panelists. And Pasuk, please lead us off here.
Thank you. Hello, everyone. And thank you very much, Liz and her colleague in Harvard-Yenching Institute. I feel very honored to be invited to participate in this roundtable with all of you today. Wealth and power is always a very sexy topic. There is nothing especially Asian about this topic. And here in the US, the issue of financial contributions to parties and electoral campaigns have been fiercely debated in recent years. Today, I will talk about my personal interest in this issue in Thailand. Put simply, I am involved with movements agitating to improve welfare systems. And the main barrier is the rich who don't want to pay for these systems and have the political power to block them. As everywhere, the rich in Thailand have got richer for three main reasons. First, the global trend of neoliberal policies to deregulate markets and suppress mass political organization. Second, the inflation of property values, especially urban property values. In Bangkok, over the past 20 years, the price of land has multiplied at least 7 times, while inflation has been 1 to 2% per year. There are many contributing causes: migration into the city, the development of Bangkok as a global city, and Piketty's law on money making more money at a higher rate than the general rate of GDP. Third, patronage, the ability of the government to construct and defend monopolies and other favoritism, which allows businesses to make super profits. So the rich have got richer. The Forbes surveys show that prior to COVID, the wealth of the top 40 business families multiplied 8 times in about 12 years. We need money to improve the welfare systems. At present, the ratio of tax to GDP is very low. Others have shown that theoretically, it should be easy to raise a bit more tax to fund because the economy has been growing every year. But the tax system has been rigged by 2 simple devices. First, it's a dual system with different rates for earned income and unearned income. And guess which is lower? Second, there are lots of loopholes for unearned income. After agitation, proposals for a new inheritance tax, a new tax on stock market turnover, and a revision of the land tax were all passed into law. But all were gutted by the military-dominated parliament. Let us look at the politics behind this just a little bit. 20 years ago, at the time of Thaksin Shinawatra, you may have heard of him, Thailand's big businessmen stepped forward to take a more active role in politics. This was disastrous for the businessmen. They exposed themselves to criticism and they fought against one another. So they stepped back. Now they work in the background. There is shadowy evidence that they were active in promoting the coups in 2006 and 2014 that brought the military back to power. The generals then brought the tycoons directly into the mechanisms for economic policy making. And the generals appointed a parliament of the rich. Their average income was 32 times the per capita income, the same ratio that Piketty found between wealthy and poor in pre-modern Europe. Surprisingly. This government and parliament sabotaged tax reforms and switched the framework of welfare systems away from universal system as a citizen right to discretionary systems controlled by bureaucrats. This is all very narrative, but I think you can see the framework. Inflated wealth is a major factor underpinning the authoritarian turn and has a direct impact on social policy. The issue is how to oppose this. The old socialist rhetoric of class or workers against capitalists, poor against rich, no longer has traction. The fallback is an appeal to social justice. The most active movement for welfare reform in Thailand calls itself We Fair. And it operates by trying to sell its policy proposals to existing parties. We're going to have election in May. So they are selling proposal to existing parties, not by organizing itself as a party. I look forward to this, to listening to other country experiences of this issue. And I will contribute more on raising some more questions later. Thank you.
Thank you very much, Pasuk. Bridget.
Good afternoon. Please forgive me, it's 4 a.m. for my body clock. I put the time watcher on here to make sure that I stick to time. Please also, I'd like to note that following Pasuk is always a challenge. So I'm going to try to add to her comments, but I would like to thank the Center for inviting me, for all the organization. It's a real pleasure to be here to speak with you. My remarks will continue the conversation about Southeast Asia. And just because I know my university in Malaysia would be annoyed if I didn't mention, I'm also attached to the University of Nottingham, Malaysia. So forgot to mention that. But my comments on Southeast Asia. We see a situation when we look at this issue of the questions of wealth and politics as a triple nexus. The nexus between business and politics is well known. Tremendous amount of research and others is on that. But the nexus between the wealth and government and the nexus between wealth and politics is something that is now being explored by many different scholars in different ways. So I'd like to limit my remarks to two sort of questions in this discussion. The first one I want to start off with are who are the wealthy? I think it's important to look at who they are. And here what we see is the role of families over generations. Politics and wealth in Southeast Asia is a family business. We see, if we look at the richest names, they've been there for a long time. I'll use Malaysia as an example. The Kwok family, the Lim family, the Cheng family, the Ananda Christians. These are people who have been benefited from favorable access to the state, accumulated wealth in areas such as property, as was mentioned, gambling, casinos, these particular rich families. But what are not listed are the politicians who should be on those lists. The Chief Minister of Sarawak, previously Tai Mahmud, the Finance Minister, Daim Zainuddin, in the context of Malaysia. These are people who have money, but are not listed as the richest because their money is carefully placed through different networks. And when we look at the politicians in the context of Southeast Asia, we see and recognize that they're dominated, most of the politics in the region are dominated by families. In Laos, we can talk about 8 families. In the Philippines, 200 families. In the case of Malaysia, maybe another 50 in that context. We know the names. And it's not just the families, it's the dynasties. The dynasty, the Lee dynasty, in the context of Singapore. The Marcos dynasty in the context of the Philippines. And these dynasties are not just the names, they're married into families. When you start to dig, for example, in UMNO politics and ask who they are, you'll start to know their family relationships, their connections. Family is so central. And as other scholars have pointed out, it's not just the family, it's the network. You know, wealth comes from people going to school like Harvard. Wealth comes from people being connected in certain relationships. And we've seen scholars like Duncan McCargo talk about the network monarchy, right? But the same thing, if you take the politics of each of the countries, you can see the established sets of networks. These hidden relationships that are pivotal, that work together, personalized. And while there has been change in some of the nature of who becomes wealthy, such as Thaksin, new sources of capital. These have been destabilizing forces in the politics of the region as new people come in and push their way into the system. And the competition among cronies and capitalists are a major destabilizing force as the oligarchy itself is challenged, as we saw in Indonesia in the 90s, and we're seeing in Malaysia in the contemporary context. But it's this understanding of looking at the wealth is to know who they are and how those connections, the families, stay together. The second question I wanted to ask in my remarks is, how do the wealthy stay wealthy? Because while there may be some families that are super rich, these long-standing families are still controlling the majority of the wealth in many ways. Pasuk talked about the tax structure and how Thailand tried to introduce an inheritance tax and a capital tax. It's noteworthy that Malaysia, Singapore, and Indonesia don't have inheritance taxes. We also see limited capital gains taxes and limited money taxes on money that they send away through capital flight. There are many tax havens, or should we say money laundering centers in the context of Asia, be it in Singapore or other places that are closely nexused. People store their money in Southeast Asian banks. We see tremendous tax loopholes. These things that are not recognized, they're carved out through special tariff protections, for example. They're carved out through the granting of monopolies over the import of certain goods, such as the AP practices in the context of Malaysia, which are special permits that come in. These are extremely well established, and they accumulate over time, and they contribute to why we see such aggrandizement of wealth, especially, for example, in the more recent period of time where in COVID, for example, a lot of these, COVID was used as a cover for some of these practices in terms of granting special loopholes. But there are other big policy areas and systematic factors that need to be talked about. Most of the countries lack any transparent political funding laws for managing elections. We see, for example, well-established patronage systems. The patronage systems have moved away from personal politics of parties to the use of the state as the patron and the control over state distribution. We see limited populist regimes. Let me give you an illustration. In Malaysia, only 15% of the budget is given to the public. 1/5 in that context. And they're given some of that measures, right, of that 15%, only a certain percentage of that, less than 5%, are given to populist social welfare programs. And they're given to cash transfers, usually heightened during an election season. These are low-hanging fruit measures that are supposed to be social protections. They're appeasements. There are no meaningful welfare systems. And these are the mechanisms that are used to kind of continue to maintain legitimacy, but without fundamental reforms. We see, for example, as my colleagues will speak about, the issues of systematic corruption that exist through Southeast Asia. And you have to understand that this is the nexus. The business people pay the bribes. The politicians take the bribes and expect the bribes, and those bribes become part of the wealth. We hear only about the large-scale scandals like 1MDB in the context of Malaysia, $10 billion in terms of a financial scandal. But the amount of money on the rest of it is much more because it's systemic and expected. and accepted. And while it may be an issue that galvanizes over scandals, the norms of scandals in Southeast Asia are endemic in the context of the region. We see also the fact that politicians use their platform to aggrandize themselves. Politics is a business. They go into it to make money. And in the policies that you see policies that are geared towards that. Let me give you an illustration. In a place such as Sabah, which has had expansion of palm oil in the 2000s and the late 1990s, given to the big political families to aggrandize wealth, the support for palm oil policies is tied because the grant of the land to palm oil were to the politicians and to their families. And so the economy cannot change to have a restructuring, a more progressive policies where you can actually have different types of wage structures because of the systemic tie in these nexus of relationships. And the sad part about it, and this is my closing type of factor that I'm identifying, is that the political culture in the society reinforces this element of entitlement. And while this is being challenged, and there are pressures as the societies are evolving and changing, there still is tremendous obstacles. As we've looked at Southeast Asia, we've seen in the last 5 years a contraction of democratic space. It is no question that this has been driven by large part by the protection of oligarchic interests, be it in Thailand, be it in Indonesia, be it in Singapore, be it in Myanmar, as a most illustration. I'll stop there.
I just want to thank Liz for inviting me. At sort of one level, it seems fairly obvious that wealth and power are sort of intertwined very, very closely. But how exactly is that power sort of exercised, and what are the constraints on that power? In the Indian case, I would argue, one, that the sort of Piketty's law about wealth begetting more wealth is partly true. Wealth inequality in India has increased, but there's a lot of churn among the super wealthy. So the super wealthy of 1950 were not the super wealthy of 1990 and are not the super wealthy now. Second, business can and does influence issues that are very specific to its business interests. But business's influence on public policy writ large is much more limited. And third, for better and for worse, the state in India is powerful and it influences business as much, if not much more, than business influences the state. So let me just start with some basic things about the super wealthy, which is about the mobility of the top 20 business groups. As with the rest of Asia, business in India is also organized around family groups. Of the top 20 business groups in 1951, half was still there in the top 20 in 1990. I use 1990 as the cutoff because after that India had its market reforms. Of the top 20 in 1990, 4 are still there in the top 20 now. So there's been a lot of, if you look at the 5 wealthiest individuals in India, that's Ambani, Adani, Shivnadar, Poonawalla, and Jindal. Only one would have been in the top 5 in 1990. The wealth creators in one case is software, in one case it's vaccines, in one case it's sort of steel and power. Now, Adani is the one case which many of you might have heard of in the last few months because of this report. That's the one which is sort of infrastructure. So both in terms of business groups and the wealthiest individuals, we do see a fair bit of churn sort of in the sort of Indian case. Now, when we think the relationship between wealth and power, at least in a country as large as India, it's very different at three levels: at the local level, at the subnational level, and at the national level. The local level is much more, businesses which are involved in construction, in land, in things like sand mining, and government contracts. At the state level, you have everything from real estate to industries that might be specific to the endowments of that state. And at the national level, that's where the ultra-rich and the big business really sort of plays. But because big business has to work in states as well, and there's a lot of political churn in India's states. So in other words, there's a party in power now, in the next elections it'll lose, another party will come to power. As a result of that, big business, while it has certain ideological proclivities, it has to be nice to everyone. It cannot afford, just as an insurance, to just pick one party. It has to operate across the country. India has multiple parties. There's a lot of churn in elections, whether it's at the constituency level, whether it is the state level, and until 2014 at the national level. So as a result, this means that the relationship between business and politics or specific politicians is also much more, shall we say, it's also quite flexible. Now, pre-1990, the relationship between business and politics was really because the state had huge, it was a socialist sort of regime, so there were business licenses, access to foreign exchange. For everything you needed approval of the state. And if you needed approval of the state, that meant that there were rents and rent-seeking behaviors around that. Post-reform, the state has, in one ways, retreated, but in other ways it has not. It has retreated from the licensing, etc. It has retreated in the sense of state-owned enterprises are playing a much smaller role. But what you have really seen is the rise of the regulatory state. And the regulatory state, the state has not retreated, it has just rolled over. And that's where it's through the regulatory state that you begin to see the influence of business through the multiple numbers of regulators that have been set up, whether on real estate, whether on insurance, whether on stock markets, whether on telecoms. So there are about at least a few score regulators in all sectors of the economy, and that's where business tries to influence. And what big business sort of gets away is what we might call regulatory sort of arbitrage, right? Rules are tweaked in favor of one or against like someone else. One of the key ways that the state across Asia always exercised power over business was access to money, basically banking, because the banking sector in most countries was state controlled. Now, after liberalization, business has access to some markets from around the world. So even though public sector banks still dominate in India, even the case of sort of Adani, most of the funding of the group was from outside India, not from within India. So actually, all the loans to Adani from the public sector banks amounted to about 0.5% of outstanding credit. Not trivial, but nothing that would really shake the system if something bad sort of happened. Now, I think one reason that big business, especially the super elite, have become more important is because India is trying to copy a South Korean-style development model, which is the Chaebol-led model, which is to create national champions, both public sector and private sector. So if you want to execute large, big, capital-intensive projects, whether airports or to build a sort of plant like for making chips, a large steel plant, all of those require very heavy capital investments, and you have to be big to be able to do that. Now, what are the constraints on the part of these groups? One of the things in my work I sort of learned is big business really dislikes the state, but they dislike sort of each other sort of even more. And I wouldn't underestimate how much of a constraint that is. India's two, what are called the AA, which are India's two largest business groups, the Ambani and the Adani. I think it's reasonably clear, to me, that this government set up the Adani to really have a counter to the power of Ambani. And so you can, trade off favors, make sure that they behave. Otherwise, you give one other group something more if the other is not, behaving. So big business, collective action on the part of big business in India is actually very, very limited because of this intense competition between and among them. A second constraint is India's federal structure. Because even if you get favors from the central government, it doesn't mean you can execute what you want in the states. And in the end, the central government doesn't control all the states. So you need to also get favors like from regional parties who control many of the states. And also vice versa. If you're very close to a regional party, you need to also be nice to the party that controls the central government. And the third, which is more recent, is the power of foreign businesses. The sort of Reliance Group, which is India's most powerful group, in sort of retail and e-commerce, it's really trying to dominate. But Walmart and Amazon have entered India. And in a sense, you're fighting fire with fire. I mean, yes, the system is tweaked to favor Reliance, but I don't have too much sympathy for Walmart and Amazon. They're big boys. They can play in this game. Liz, how many minutes left? Now, how is this power sort of exercised? Now, corruption is, of course, ubiquitous in India. But one of the surprising things about India's political economy, most of its prime ministers, there's very little evidence that they've ever made personal money. They've been actually reasonably honest, almost all of India's prime ministers. There are some exceptions. They all, of course, take money for the party. But you'll never see of an Indian prime minister, as opposed to regional leaders, having a dacha here or a property there or, big bank accounts. That's surprisingly completely. In fact, like for this prime minister, that's his basic thing that, I'm serving you as I'm serving the country, and that, is that honesty part that actually is one of his big selling points in trying to win votes. But I think, look, India's success as a democracy is also its Achilles heel. And I say that in the following sense. Its elections are extremely competitive, and it has elections at the national, state, local level. And when you have competitive elections, you need a lot of money. You can't have a democracy without elections. You cannot have elections without money. But that very money begins to undermine the very democracy that you're trying to build. And that's the paradox of democracy. It's a paradox that is, we haven't been able to find a way anywhere, well, maybe in sort of Europe, But broadly, I think it's been one that has been undermining democracy in this country, and undoubtedly has done so in the Indian case as well. And we really don't have any good fixes. We really don't have any good fixes. Now, one thing that I would say how big business helps the parties in power is it has begun to control the media. In the past, big business did not own media in India. Today it does. And therefore it can shape the narrative, and it definitely is shaping the narrative in favor of the government. It also has ways in which it can finance around the world, trolls and social media, which again are part of shaping the narrative. And that, I think, is a relatively new and much more insidious role of the relationship between business and politics. I'll just end with one remark. One of the things I've seen when we think about big business and politics, we always have this thing that politicians are bad. They are the guys who made these big businesses, make all this money. I would argue we should not underestimate how much elites around the world, their wealth has been shaped and made by the professional classes. The law firms, the consulting firms, the private equity firms, the venture capital firms, these are all graduates of the most elite universities who run these top firms. And they are the ones who manage the wealth, who make sure that they find the loopholes that protects that wealth, make sure they find ways that the wealth is dispersed, invested, and so on. And much as we think that it is only politicians who are sort of responsible for much of this, I think there's a lot more blame to go around for the realities that we observe. Thank you.
Thank you very much to Liz and to Harvard-Yenching for having me. It's a real privilege to be here. It's been hugely stimulating to listen to the remarks of my fellow panelists. And it occurred to me that it might be appropriate to title today's panel, Asia's Gilded Ages. The term Gilded Age was coined by Mark Twain in his novel about America in the late 19th century, referring to a period of extraordinary growth accompanied with corruption and inequality. And the Gilded Age is a brilliant term because to be gilded is not the same as being golden. To be gilded means beneath the surface of glitter, there is base metal. There are many social and economic problems. So I find the term Gilded Age very helpful for understanding the problems of development that we are facing today. In my remarks, I would like to focus on offering two ideas. The first is about the varieties of corruption, and the second idea is about the configurations of corruption. Now, conventional metrics of corruption ignore the different varieties that corruption comes in. The most popular metric, the Corruption Perceptions Index, or CPI, you might have heard of it, is released by Transparency International every year. And it measures corruption as a one-dimensional problem that ranges on a universal scale from 0 to 100. And in this formulation, poor countries consistently look extremely corrupt, while rich countries, especially in the West, appear clean. As I argue in my book, China's Gilded Age, this is first world bias at work, where the rich and the powerful measure themselves under the guise of global metrics in ways that hide their problems. So as an alternative to the CPI and the one-dimensional understanding of corruption, I propose an unbundled conception of corruption into 4 distinct types, which you can see, I hope, here in this figure. Let me see if I could expand the size of this figure. Not really. Oh, there you go. Now, the public is familiar with the first 3 types. The first type of corruption is petty theft, which is in the top corner. This refers, for example, to police officers shaking down people on the street, for example, acts of extortion by low-level state agents. The second variety is grand theft, on the other side, on the right-hand corner, such as national elites siphoning massive sums from public treasuries into private accounts overseas. The third variety is speed money, petty bribes paid to regular officials to bypass red tape and delays and grease the wheels of bureaucracy. All 3 types are illegal, they're condemned, and rampant in poor countries. But corruption also comes in a 4th and more elusive variety, and this is what I call access money, which is the bottom box on the right. In this kind of transaction, capitalists offer high-stakes rewards to powerful officials in exchange not just for speed, but also for access to exclusive, lucrative privileges, including cheap credit, land grants, monopoly rights, procurement contracts, tax breaks, and the like. Now, access money can manifest in illegal forms, such as massive bribes and kickbacks. But it also exists in perfectly legal forms. Take lobbying, which is a legitimate means of political representation in the United States and other democracies. In exchange for influence over laws and policy, powerful groups fund political campaigns and promise politicians plush positions after they leave office. So in providing this unbundled conception of corruption, I offer the analogy of drugs, because intuitively we all understand that drugs harm. Different types of corruption harm countries in different ways. Petty theft and grand theft are like toxic drugs. They directly and unambiguously hurt the economy by draining public and private wealth, while delivering no benefits in return. Speed money is like painkillers. It might relieve a headache, but it doesn't improve your strength. Access money, on the other hand, is like steroids. It spurs muscles growth. It allows you to perform superhuman feats, but it comes with serious side effects, including the possibility of a complete meltdown. So the harm of access money only blows up in the event of a crisis. Today in China, we are witnessing a potential meltdown in the real estate sector, which was the hotbed of access money in the past 2 decades. And elsewhere, historically, we've seen the eruption of crisis linked to corruption that was preceded by euphoria. America's first Great Depression of 1839, which was triggered by risky public financing and state bank collusion, the 1997 East Asia financial crisis, and the 2008 US financial crisis. So based on this theoretical model that I showed you, I piloted an alternative metric of corruption, which is called the Unbundled Corruption Index, or UCI. It basically adapts the method of expert perceptions survey, but instead of measuring only the perception of overall levels of corruption, I measure perceived levels of corruption in each of the 4 categories. So I'm not going to bore you with the technical details, but if you're interested to learn about the method and the index and the findings in a fun way, I would refer you to my podcast interview on Freakonomics. It's called, Is the US Less Corrupt Than China? The nexus of wealth and power is not unique to Asia, but does it have particular characteristics in Asia? Now, this depends on which part of Asia we're talking about. Japan, South Korea, Taiwan, and Singapore are typically grouped together as the Asian developmental states. But countries in Southeast Asia may not have an equally high level of technocratic capacity. The Chinese bureaucracy practices meritocracy, but its meritocracy is simultaneously corrupt and patronage-driven. As Chinese officials climb past layers of stiff competition and into the highest level, they are arguably all competent. The distinguishing factor is their networks of wealth, i.e. corporate cronies, and power, patrons and clients in the political system. So in thinking about the similarities and differences in access money politics, we might want to consider two key sets of questions. The first set of questions I would ask is, when we look at a given country, is this a country with high levels of access money paired with effective control of growth-damaging forms of corruption, namely petty theft, grand theft, and speed money? Let me give you a visual example. If I can flip to the next page. So this is the visualization of UCI I talked about. And for every country, what you can see is the total perceived corruption score in parentheses. And this total score is divided across the 4 categories I've just introduced. So this structure of this measurement of corruption allows us not only to compare overall levels of corruption, but also the configuration of corruption. So when we take a look at South Korea compared to Thailand, for example, it appears that although Thailand and South Korea have quite similar levels of access money, 6.5 in Thailand and 6.1 in South Korea, what's different about South Korea is that it has more effective control over other forms of corruption. A second question we might ask is, rather than thinking about which country is more corrupt, we should ask, why do we see different configurations of corruption? And I suspect this has to do with the interaction between the engines of growth in a given country and its political system. For example, we might think of Russia as a model of a country reliant on natural resources, plus a personalist autocratic system centered on Putin and his oligarchs. The US is a highly financialized economy with a sophisticated legalized lobbying system that enables the banking sector to benefit from lax regulations and bailouts, whereas China represents a decentralized emerging economy with a booming real estate sector, plus a one-party autocratic system featuring patron-client relations and massive graft. In conclusion, I would say that victors don't just write history, they write political economy. And victors like to tell the story that capitalism was all about progress, about neoliberal governments, private property rights, level playing fields. But if we take a serious look at the historical facts, the reality was quite different. I would argue that corruption was actually less about eradicating poverty and more about transforming the structure or quality of corruption from thuggery and theft to access money. And on this account, countries in Asia are novices compared to countries in the West. So if we want to draw lessons from the past and think about what Asia should do and where it should head, perhaps we should take a closer look at the actual history of capitalism in countries such as the United States and the United Kingdom. I'll end there. Thank you very much.
Thank you, Liz, and thank you, Yenching Institute, for inviting me to share the panel with the distinguished speakers. I'm going to sort of give an overview of 3 prevailing patterns of the relationship between wealth and power in Asia. And it is a maybe a paraphrasing of the famous quote that happy families are happy in the same way, unhappy families are unhappy in different ways, except I don't know which are happy situations, which are unhappy situations. So let me just lay out there. So one pattern is pure predation, and this is similar to the guan theft that Yuen described. And I will use that perspective to describe the Philippines under Marcos and Indonesia under Sukarno. Right? So Mrs. Marcos famously had 4,000 pairs of shoes, and they're expensive shoes. And what I also learned recently is that she created a zoo just for herself. So that's a little bit extreme. Sukarno, maybe not that outlandish, also essentially predated on the country's natural resources and essentially transferred wealth from the country to himself. Associated with that pattern is typically economic stagnation and poverty, right? So essentially it's a pure transfer without creating new wealth, and it is really about using political power to divide existing wealth and assets between the country and the elites. The second pattern that I see is wealth sharing between the wealth holders and the power holders, right? So I describe that situation under Suharto in Indonesia, and probably Najib in Malaysia, when the prime minister essentially used his power to basically transfer wealth from, and in this particular case, really transfer from the foreign wealth holders to himself because it was a foreign bond issue. And Devesh talked about sort of how that kind of corruption was helped and assisted by professional class. In this particular case, it was facilitated by a Wharton graduate. So I'm not saying anything bad about Harvard, nor about Sloan. So I'm more willing to provide that piece of information. And Suharto has a wife. His name was Mrs. Tian, commonly known as Mrs. 10%. Right? But in that type of situation, you actually do see wealth creation. So essentially, the power holders predate and loot the newly created wealth rather than existing wealth. So we can have a debate about, how we judge people like Najib, Mahathir, and Suharto. Prime Minister Lee Kuan-yew's view is very, very clear. He argued that, yes, Suharto was corrupt to the tune of $5 billion, but then he also said that he created wealth, he created economic development for Indonesia. And he went even as far as to say that Indonesians should be thanking Mrs. Suharto. I wouldn't go that far, but at least we should bear in mind that there is a fundamental difference between the Marcos of the Philippines and Suharto of Indonesia. The third pattern that I see is kind of power triumphing over wealth. And essentially, wealth, power was not contaminated by wealth, and it remains absolutist. So in the case of South Korea in the 1960s, there was a coup that overturned the democratic elected president. A military general came in, and Park Chung-hee at that time wanted to change the development strategy of the country from import substitution to export promotion. But as we know, businesses are not very happy when you ask them to change their business strategy. It requires fundamental different capabilities and fundamental different know-how. In a normal society, you would devise tax policies, incentive programs to kind of try to attract them to pursue an export promotion strategy. Park Chung-hee had a better idea. He arrested all the business people, right? And he had them put up a placard that says something like, "I'm a pig." He released them on the condition that they are going to change their strategy. And South Korea succeeded in the most spectacular way in terms of becoming an export power and in terms of becoming today an innovative economy. So there's something about that method. It turned out to be okay. The other situation I can think of is China today, right? There was a lot of kind of academic speculation that the country created a lot of wealth, the country created a lot of wealthy people, and therefore somehow the politics was going to change. The politics was going to moderate. So let me give you a few sort of facts. One is that so let me go back a little bit. And then scholars will cite the membership of the National People's Congress as comprising of a few very rich people as evidence that the rich people are beginning to change Chinese politics, right? National People's Congress is like a Congress, except it has no power, right? So that's a fundamental difference. What's interesting about Chinese political system is that they put the rich people in political institutions that have no power, right? And the one body that does have power, the Central Committee of the Chinese Communist Party, even today, it doesn't have a single private entrepreneur, right? In 2012, there was one private entrepreneur that was this close to getting into the Central Committee. And he actually pledged all of his assets to the Communist Party. He said, these are really assets of the Communist Party, not my personal assets. And I really want to get into the Central Committee, right? Even he was already a party member, so he qualified in a technical sense, right? And he was denied. So he was one person that close to the Central Committee, and yet the Central Committee did not include him. So look at what happened under Xi Jinping, right? The Communist Party cracked down harshly on private entrepreneurs. Jack Ma, a famous entrepreneur, he probably thought that he had political power that he didn't have, right? He was very outspoken on various issues. So two things about Jack Ma. One is that he was a party member from the 1980s, right? And the other is that the Western press would quote his critical comments on the Chinese Communist Party, on the Chinese system, mostly really about finance and economic stuff, not about political system. They don't quote him multiple times praising the Chinese Communist Party, right? So where's Jack Ma? He's not in China, he's in Japan, and I don't think he wants to go to China anytime soon. So essentially, this is a system that has unconstrained political power, and even though there's a lot of wealth created under their watch, the Communist Party can control the wealth holders anytime they want. Right? So there's no de facto constraints on politics. I think that raises a bigger issue about what are the sources of potential political changes in China. Right? I can think about the wealth sharing scenario that could induce some political changes. But in this kind of a political power dominance scenario, it's very, unless you have financial crisis, you have economic crisis, it's very hard to think of a condition under which the politics is going to change. If Jack Ma cannot change Chinese politics, I don't think, from outside of the system, I don't think anybody else can. Right? So that's a fundamental, this idea that economic development is going to bring about political evolution, going to bring about political moderation. I think the flaw with that idea is that it is focusing on the demand side of the equation, and it is totally ignorant about the supply side. Right? All the fantastic economic growth, so to some extent, is the opposite of Indian situation described by Devesh. Essentially, this fantastic economic growth that China achieved did create a middle class and probably also created middle class aspirations. But these are all on the demand side. There's no supply mechanism that links the demand side to the nature of the political system. And that is very, very different from South Korea. This is very different from Taiwan. Right? South Korea already had political divisions within the ruling party, and they had nominal elections when the system was autocratic. So there was already division within the political system, and then the economy took off, then the demand got the supply side, coincided with the supply side to translate into political changes. In Taiwan, it was first the KMT began to split into sort of the mainland faction and the Taiwanese faction. So there was already political division, and then the economy took off, and then democracy happened. In China, 10 years ago, 15 years ago, I didn't see any evidence of that sort of split. And today, to the extent there was any split, today that split is no longer there under Xi Jinping. Thank you very much.
Thank you so much. I think we've had 5 really quite fascinating presentations. And there are a number of questions that I have of the panel, but let me ask the panelists if after listening to one another's talk, there's some questions you'd like to ask your fellow panelists. Yes, Pasuk?
I'd like to ask Professor Yasheng.
We're going by first names. Professor Yasheng?
I can accept that.
How should I call you?
No, it's really fine. Yeah. I'm used to all kinds of pronunciations of my name.
one often think of the Chinese state as a strong state, right? And yet, in the Western world, a strong state is a state that can impose taxation and provide welfare and all kind of things to the people who demanded it. And yet, in the Chinese case, the tax to GDP is pretty low. How do you account for that? And that also suggests that the state hasn't tried harder to satisfy the people, and what would be the implication of that?
So Liz mentioned that I'm working on historical topics. In the Ming Dynasty, there was an essay question. So China famously has the civil service examination system. There was an essay about whether or not the government should increase taxes. And the person who scored A on that essay is someone who made the following argument. He wrote, "Emperor, you own the whole country. You don't need to tax your people," right? So I think that description still applies in China today. So essentially, the reason why in the Western societies we need strong fiscal capacity to tax businesses, households, in order to satisfy the social spending, defense spending, economic spending, is that because we don't really have other mechanisms to transfer resources from economy and society to the state. The Chinese state has multiple mechanisms to transfer resources from economy to the state. Taxation is one, it's not really the primary method of transfer. They own many assets, right? So essentially they enjoy the dividend income. And increasingly in the last 20 years, it is really the land sales because they own the land. And it's a little bit like, so many people think that the low taxation or lump sum tax in Hong Kong is somewhat a evidence of low taxation in Hong Kong. No, that's not true. Hong Kong government could lease land and they get a lot of revenue from the long-term lease land. And the third, so taxation is one of the many tools. And the other tool is really about control, right? So if you look at Alibaba, now the Chinese government has established about 1% of share in Alibaba. I can guarantee you their voice is not 1%. Their voice probably is 99%, right? So essentially when you have control right, so in the West, usually control right and revenue right are correlated with each other, right? If you have 50% of the control of the business, you have about 50% of the vote on the board. In China, when the government comes in, they don't need that, right? So it's extreme golden share. And so it is not quite right to measure state capacity by taxation.
But they're not making the money.
Please go ahead.
They use it, though, to fulfill the population, sorry.
So, but that has to do with the uses of the money rather than the transfer of the money, right?
Can I have another question?
Well, let me pursue it a little bit further, because in the case of Hong Kong, actually, yes, the government made a lot of money from land, but it benefited the people, and it improved the infrastructure and all kind of things in a way that satisfy the people's demand.
Yeah.
But we don't see that happening in China. Sure, the state has a lot of income from land rent and all kind of thing, but it's satisfying itself. It's promoting itself
Sure,
and
sure.
the party.
Yeah.
And surely this must have implications on how the people react, because as far as we know about China, they have not really decided on what to do with the public, let's say, public health program.
Yeah.
There's still debate. I understood that there's a lot of debate on this, and they have not decided on it. Surely something need to be decided on that with such a capacity and ability to create wealth.
Yeah.
And they could have taxed. They could have also taxed these companies that make so much money, right?
Yeah.
More than what they did, because the share to GDP.
It's very small.
The
Yeah.
inheritance tax is not there. The land tax is not there.
Yeah.
It's just a puzzle, right? It's just a puzzle to me. And
Yeah.
So Yasheng, if you'd like to make any more comments, or Yuen?
My comments are all about the sources of money rather than the uses of
Right,
money.
right. Do you want to make any comments about the reluctance of the Chinese regime to use it for welfare purposes, or?
Well, I think it's maybe too extreme to say that they are not using money at all for public welfare purposes. I think the key thing is that they would do that according to their schedule, according to their definition, right? So when they do spend money, they actually do, right? So if you look at, for example, I'm one of the PIs on food safety. There's no question, food safety has improved dramatically under Xi Jinping. If you look at pollution measures, it has improved dramatically, right, under Xi Jinping. So it is not, I mean, it is not, I mean, I agree that they do lots of things that are not in the public interest, but they also do certain things in the public interest.
Mm-hmm. Yuen, do you want to comment on the Chinese case?
No, I had a separate question.
Okay, please ask your question.
Sure. I was really struck by Pasuk's comment about the sources of wealth in Thailand. I think you mentioned the figure was that land and real estate value had risen 7 times within a short period of time. And I think that is a really important observation, because I think it also holds true in much of Asia. China in particular, inequality has been driven by whole ownership of land and property. It's also not unique to Asia. I recall a story of a particular personality in the American Gilded Age, and I can't remember his name, sorry, because it's a sign of aging, but I remember the story where someone asked him, what is the greatest regret of your life? And he said, that I didn't buy every piece of land in Manhattan. and so it's an old problem. I guess that observation sparked for me a kind of policy and practical question. That is, in an ideal world, assuming that the government is willing or wants to tax, what would be the right way to redistribute that wealth from the dramatically rising value of land? So in China, for instance, there isn't even a property tax, which makes holding property excessively incentivizing. But I recently was actually reading a biography of Sun Zhongshan, and I was quite intrigued that back in those days, he was actually reading about the political theory of an American theorist called Henry George. And his theory was that countries should have a single tax, so just do away with income tax and everything else, and just tax the increase in value of land. I thought it was a radical proposal, but it was kind of interesting to think about this, particularly given just how central land value is in the creation of wealth and inequality, both in Asia and in other countries. So I just thought I'll throw that out. I don't know what an ideal tax regime would be like, but I just thought I wanted to share those observations.
Devesh?
I think this sort of increase in property values is, of course, the case in any rapidly growing country, and especially which is also sort of urbanizing rapidly. So we've tried to create data on increases in property values in sort of Delhi, and you need a log scale. You can't even do it on a linear scale. It's that exponential. And one of the puzzles about India, like with China, is although there was a lot of socialist rhetoric, again, property was not taxed and very low. But I would argue that at least, I don't know the Chinese case well, but at least in India, the wealthy, yes, a lot of their wealth is in property and they're escalating, but not the very wealthy. The extreme wealthy, property is a small part of their portfolio. It's really financial wealth that is the bulk of the wealth of the extremely wealthy. Land is, yes, it is it's really a very small part. To have a wealth of, 50 billion, you have to have a lot of land, to sort of, and that, there are lots of reasons why that doesn't really take place, at least sort of in the Indian case. But I do think why countries and parties, in India, the Communist Party did not want to impose property tax. And even now, there's a Communist Party that rules in Kerala, which is the most left-wing state. It's very low.
I would like to ask a question also that wasn't brought up in the comments, and that is about the movement of money from one country to another. You mentioned, Yasheng, that Jack Ma is off in Japan. I think he was skiing up in Nagano all winter, as I understand it. But how much money he had with him, I have no idea. But certainly when I visited Singapore in January, everybody was talking about all the Chinese money coming in, both from Hong Kong and from mainland China. And, of course, property values shooting up in a reflection of that. And so I wanted to ask a bit about that and how much of a phenomenon you think it is, how it changes this relationship, or does it, between the super rich of a particular country and their government if they're taking their funds out and moving elsewhere, not because they're being taxed to death, clearly, but because of other kinds of fears that they have. Devesh?
So there's some evidence. We see now there's work that shows that within the US, there's a flight of millionaires from New York, like to Miami, in Asia from Hong Kong to Singapore, and especially now from Russia, like to Dubai. And there are sort of estimates of millionaires moving out of different countries, and China and India are very high. But these, and the super wealthy for sure will have international portfolios. But at least in the Indian case, the super wealthy don't leave the country. Because if they leave the country, their link with politics and managing things becomes much, much weaker. It's the wealthy, but not the super wealthy, who are much more liable to buy what are called golden passports. In Portugal, you invest $1 million, you can get a passport. So sort of Malta, Cyprus, and Portugal are the favorite countries for the world's millionaires. Because if you get a passport from one of these three, you get a Schengen visa. So then you can roam around to the rest of sort of Europe. That you see a lot happening. But again, I think the super wealthy play by their own rules. They are somewhat distinctive.
Mm-hmm. Yes, Bridget, and then Yasheng.
I just wanted to, I did mention capital flight as part of the way that I think that, there is this network of processes that are at play. I think that it's interesting to look at how some countries are using this as a policy, to bring in wealth. Singapore has done this. Not only they've targeted the Hong Kong, but they have a new visa policy for 5 years for people who put money in the country. It's part of the sort of a way to give incentives, and so we see a lot of billionaires living there, and this has affected the kind of the whole inequality structure in the society. And so I think that I do feel that the use of capital flight is a very important part of how people maintain their wealth, and also how governments are also capitalizing on this and attracting it. And for some countries, Brunei does the same thing in the context of Southeast Asia.
Yasheng?
Yeah, so if you look at many Chinese high-tech companies, many of them established a Hong Kong legal presence from the very beginning of these businesses. But I don't think they did that because they were predicting Xi Jinping's crackdown. They were doing that for mostly taxation reasons and ease of doing business and access to efficient financial services in Hong Kong. Now we're seeing something very, very different. Now we're seeing capital flight because it is driven by fear or personal insecurity and insecurity of property. Right? So that's a very, very different concern as compared with the previous considerations about evading taxes and business services, because those were forward-looking considerations. You expect your business to grow, but you don't want to pay so much in taxation. But now it's really kind of protecting the things that you already have. Hong Kong is no longer able to serve that function. So essentially, Singapore more and more is doing that. Switzerland used to do that more than it is doing that now, because Switzerland is under pressure under anti-terrorism policy of the U.S. and also corruption, anti-corruption. So there has to be more transparency. Singapore is attracting a lot of Chinese money. And frankly speaking, I worry about that for Singapore. Right? So if you look at London, which was a tax haven, Bermuda tax haven, it probably benefited small elites, financial elites, right? It didn't really benefit the broader segment of the population. I mean, Singapore does have technological agenda. I don't know if you increasingly move in the direction of providing tax haven, whether or not that is going to undermine your other policy objectives. So I think this crackdown on private capital in China is going to have worldwide implications because of the capital flight and also because of the flight of the entrepreneurial talents. So these entrepreneurs, for sure, are more capable in China than they are outside of China. So essentially, the flight of entrepreneurial talents means that there's going to be a reduction of the utility of these entrepreneurial talents than before, right? And that's reducing the Chinese GDP growth, but arguably speaking, it is wasting the talents of these people in a way that could have been avoided if we have a different regime.
Mm-hmm. Pasuk, do you have another question, and then we'll open it up?
Yeah, I have another question. Does this show that the Chinese state doesn't know how to manage a capitalist society? So it became paranoid and keep repressing these capitalists, but at the same time also as it were, losing the opportunity to improve. Why do they not? I mean, as a state that will take care of the people, let's say like with the tradition of socialism, why don't they think about mobilizing some of these funds? And also, at the moment, China has also had a huge reserve piling up, and not using it. They could have used it. So what the question is, what is this state? What is the purpose of this Chinese Communist Party state? Is it just bending upon creating its own power? And why not sharing it with the people where you can? Because you have wealth, you have the wealth.
I think fundamentally it is not just about autocracy, but it is a question about personal autocracy. So Chinese Communist Party has 95 million members. Many of them are capitalists. Many of them own apartments and assets. I think if you allow the policy to reflect the collective view of the Chinese Communist Party, they are not going to do the things that I described them as having done, right? Cracking down on private sector and reducing GDP growth. Their natural incentive is to grow the GDP. So this is a distinction between institutional autocracy, which reflects some sort of aggregation of the preferences of many party members, and the personal autocracy that enforces and reflects the preferences of one leader. Prior to Xi Jinping, China had leaders that didn't do these things, right? So it's hard to make an institutional argument that every time the Communist Party is going to crack down on the private sector. It is clearly Xi Jinping that did these things. But the problem with that system is that it doesn't really have any mechanism to check and balance the top leader. And so essentially it's a random event, whether or not you have a pro-growth leader or have a leader that maximizes power, prestige, and so that will be my explanation.
I think we should open things up to the audience here and take several questions. And if I could ask you to identify yourself, and if your question is directed toward a particular panelist, to identify the panelist whom you might like to try to take a crack. Tom.
Thank you. Tom Remington, I'm a visiting professor in the government department and have an interest in the inequality issue. Oh, Tom Remington, the government department visiting with a strong interest in the inequality issue and on the question of how political influence is exercised by the very wealthy in various countries and how the politicians are engaged in relations with the highly wealthy. It strikes me that Professor Kapur mentioned, and we know this problem of collective action on the part of tycoons arises everywhere, especially when there are rivalries among them. So there are efforts in the U.S., to be a good example, is a lot of effort to pool and aggregate and channel their influence and their money and their resources. But collective action is hard to sustain. What I think, and we know about private influence peddling, and Professor Ang's book details that in great detail for China. What I wanted to call attention to was the potential for a kind of latent power, a kind of foot dragging or tacit power. The inability of the Chinese government, despite enormous rhetoric about common prosperity, to impose any kind of serious constraint on wealth or property is quite notable, and it keeps getting narrowed down, doesn't it, to Zhejiang and so on. More attention, of course, to the poor. But the idea of constraining wealth except at the individual level, so you can have cronyism, but individuals are vulnerable. But the idea that the wealthy will leave or that they will somehow stop supporting the political party or those in power, that tacit power, it seems to me, which doesn't need to be aggregated, it's just the individual action, a lot of people who are really unwilling to comply, that strikes me as a real form of power, but it's less visible, it's not proactive.
Yes.
Hi, thanks for everyone's panel. It was really interesting. I have a question about morality, because this is essentially, I mean, we talk about wealth and power. It's kind of a moral issue in everywhere. We think about the progressive movement following the Gilded Age. So I'm just curious, sort of, for each of the countries we talked about, and maybe overall, how you see the role of sort of morality, and also sort of how popular discontent is channeled into solutions. So I think in the Chinese case, there's sort of this popular crackdown, the Common Prosperity move, sort of campaign governance. In Singapore, which is known as a kind of meritocratic system, there's the kind of state providing goods, providing housing, and in Thailand, even sort of Thaksin, right? This sort of Thaksin movement was popular with the rural Northeast, but was also itself created its own sort of networks of patronage. So I'm just wondering sort of how you see the prospects for what alternatives can countries do? Is it just going to be more centralized kind of approaches? What's the role of sort of bottom-up movements, if any, in these places that we've talked about? So,
Yes. Can you pass the microphone down here, please?
Thank you very much for this excellent panel. My name is Krishna Oak. I work for the Association for Asian Studies. I'd just like to give a bit of insight into Cambodia, which is a typical kleptocratic country, and it does really bear resemblances with some of the elements of the architecture of power and wealth that you have been describing. 4 elements really into this. One is how maintaining power and wealth at the higher level, at the Prime Minister's family level, is only possible if you are forcing the police, the army, the people working in education and health to be paid extremely low. In that case, the level of corruption at this smaller level is totally pervasive, and it makes the system endemic. If these people are already themselves involved in some form of petty corruption, then it enables the rest to go up and to be sort of legitimized. In some way, it does illustrate your unbundled conception of corruption, because the 4 elements only exist because they are interdependent on each other. And then the other element that you mentioned, Bridget, was the family. And in the case of Cambodia, the family is really symbolic with power and dynasty. Hun Sen is now looking into officializing who is going to take over after he steps down. We do not know yet when he's going to step down. He's only 70. And his son looks like he's going to take over. Now, however, the opposition party is trying to pit him against another powerful family, which is the family of the Minister of Defense, Tipan, because he's got a son, and they're trying to sort of play them against each other. I'm not sure this is going to work, though, because they're all intermarried, as you said, and this is a very, very important way to get people stuck together. The other thing is visibility in time. Hun Sen has made it extremely a successful case in muzzling the opposition. There's no opposition party. Therefore, in terms of visibility, in times we're thinking about decades and the next generation to take over, hence making this powerful structure and architecture lasting for the foreseen and foreseeable future. And the last thing I'd like to add, which none of you has really referred to, which maybe only exists in Cambodia, is the use of karma in the framework of Theravada Buddhism. And Hun Sen is very, very much interested in this because he needs legitimacy not only in the eye of the population, but also for himself. And what he's done recently is that he's been giving merit and going to the ancient royal capital of Udon, which is about an hour away from Phnom Penh, where the royal family is buried, and basically renovating old stupa. And people believe that the merit that he's generating is giving him this powerful karma, this powerful sense of legitimacy that he really craves for him and his family. Therefore, again, really legitimizing this. Thank you.
Okay, so you're asking whether there are comparable examples of those 4 things in the other countries. Yes, Tarun and Yamin.
Thank you for the panel. I'm Tarun Khanna. I'm a professor at Harvard Business School. It was just interesting to hear a panel on wealth with nobody say stock market in the entire panel. And there's a substantive point there because, the closest we get to a vibrant stock market in any of these countries is probably India. And that's a viable, that simply dominates. all other practices of wealth accumulation. So I would just submit that that's a dimension that should enter the conversation somehow. And I just speculate as to whether, I don't know whether it's active or a de facto suppression of the stock market is a way to cement power of the elites, because the stock market, if it functions well, could serve to recycle capital and democratize entry of all sorts into initially standard entrepreneurship, and eventually, as we see in India anyway, over time into the political process also. And that would account for the churn that Devesh is appropriately describing in the corporate elite over decades now, and the relative absence of churn in some of the other places. Just a dimension to consider. So.
Meen?
I have a question and a comment very quickly. The first question is, when we look at Asia's wealth and power, and we see variations within Asia and with non-Asian societies. So I wonder, how do you see the causal due to more to the political system, democracy versus non-democracy, advanced versus developing country, and Asia's tradition versus the non-Asian Western society. My comment is about China. I think we really have to look at China as a case on its own. The communist rule, the legitimacy is really nationalism, and from this perspective, this country is still relatively poor, right? 12,000 per GDP per capita, and it's a country that wants to rise to double its GDP in the next 25 years while achieving green transition, demographic crises. So with all that, I think the society has a lot of buy-in that the government provide the basic education, health, good infrastructure, and the necessary transition into almost a low growth economy. That's sufficient, rather than taxation on property. In particular, most of the property owners are small property, so it's basically urban households. You tax them. It doesn't make a lot of sense from the Chinese society's perspective. Thanks.
Okay, we could take one more question if there is one from the floor. And yes, Chandler.
Chang Dongzhang, a visiting scholar at the Yenching Institute and Peking University. So my question is actually, it's like, I think related to like all of you. So in some countries, the state kind of can predate the business, and in some countries it's kind of like more about the business who's capture the state, right? So is there like one general kind of like theory or typology that can explain like this kind of like different business-government relationship in Asia? And if we compare these Asian patterns with, as Yuen did, like compare with like United States and other developed countries, are there kind of like some specific Asian model, or I mean they are not very, or they are like just very universal, not very specific? Thank you.
Thank you. We do have to conclude in less than 15 minutes, so I'm going to start over there with Yasheng and ask him to make some very brief response to whichever part of the questions that were raised. Don't feel compelled to try to answer everything, but if you'd like to make some brief concluding remarks, and then I'll ask Yuen to follow you, and we'll move up this way.
Yeah, so maybe I'll comment on Tarun's question, and then
on the stock market.
Morality. The stock market, yeah, that's true. I think the Chinese stock market has been pretty efficient in destroying wealth. So it is subtracting. Yeah, so India, I mean, remarkably, India has a booming stock market. If you invest in India vis-a-vis investing in China, it's very interesting that the two countries differ in terms of direct investments and investing in stock markets, and the performances are very different. But that said, the Chinese entrepreneurs I think this is different from India, but correct me if I'm wrong. They want to list outside of the country. So essentially, you have a selection effect. Bad assets get listed in China, good assets listed in Hong Kong, US, and other locations. So that may be one explanation about why the Chinese stock market has not been performing in the way that the Chinese GDP has. But there's also poor oversight, poor regulation, insider dealing, government corruption. I mean, all these things that we can think of that destroy the normal function of a stock market. China has all of them and more, right? So stock market has not been a powerful driver of wealth creation. The real estate market is. I think there's a comment earlier about, I think Yuen made that point, right? So a lot of the real estate holders are actually regular people, right? So taxing real estate would have that kind of implications. And we tend to think about real estate as tycoons, but actually regular Chinese also own real estate assets. On morality, very quickly, so my understanding of morality, the progressive era, is that it happened during the sort of the boom of the business wealth creation, right? The gilded 1920s, and then the crash and the economic depression. And then you have the morality movement, you have the progressive movement. China has not yet had the combination of these two, right? You have this wealth creation, but not yet the economic crisis and depression. Once you have those two things together, I would argue that will be the moment when a progressive movement will be created if the government allows it to take place.
Yuen?
Yeah, thank you very much. Really excellent questions. I'll just share a set of concluding reflections relating to morality and as well as other comments made. I think that the excesses of capitalism are not unique. They're found across many countries from South Korea, Thailand, India, China, to the United States. But what is different is the way countries respond to the excesses of capitalism. And here I think the comparison between the United States as a democracy and China as a one-party autocracy is stark. The difference in the US is that the response to the excesses of capitalism was largely bottom-up. You have political activists, trade unions, civil society having a really strong voice and expressing the problems in moralistic terms. And no doubt you had strong executive action from the top to create a welfare state and break down monopolies, for instance. But if you look at China today, it's very clear that it's a one-party top-down approach of we know we have corruption and inequality, and the current leadership is trying to tackle these problems using commands and campaigns. So they're using an authoritarian toolbox, the kind of methods that they know well. And they're also moralizing it, but they're not moralizing it from a bottom-up democratic way. They're moralizing it in the sense, the analogy being used by Xi is that we have a disease within us, and we're going to use a knife against ourselves, right? So kind of a very gory kind of analogy. But you do see the same moralizing happening, but the contrast between the top-down and the bottom-up methods are quite remarkable.
Devesh?
So I think just to shed some light about how we think about property tax in India. So basically, property is held under, most of it is held under two groups. So rural by like farmers, and urban by the middle class. The very elite, in value terms, they might own, but overall, as a fraction of the economy of the land and property held, it's a really small fraction. As Tarun said, the elite hold their assets in more, financial assets. Now, under the British, land tax was the principal form of revenue. And there is very strong evidence that that had very destructive consequences on the Indian peasantry. So after independence, there was a real backlash on land taxation and land revenues. Over time, as the representatives of the people, India was largely rural, came from the farming community, they were even more reluctant to have a large land tax. So land taxation, revenues from land taxation basically almost vanished. Now, in sort of urban areas where it's largely held, that's the key source in which middle class has its wealth is actually property, the houses where they live in, or the apartments. Now, as property prices have escalated, what you see is that these people are asset rich, but they are cash poor. If you're a retiree, your house might be worth a lot. If you tax it at the rate that it should be, their pensions will absolutely not be able to pay. And this is the conundrum when you have escalating land values which are way beyond the sort of incomes of the people. There's a big discrepancy between escalation of land and property values and the actual incomes of most people who sort of live on them. It's very hard to tax. Furthermore, in India, property taxation is a local government. It's not a national. The national government cannot do anything about property taxation. And local governments, in India, as it's sure that the closer you are to the people, the harder it is to tax them. You have to be far away. That's why the British could tax land, because they were based in London. It's very easy to tax in India, property. The closer you are to the people, at least in India, the harder it is in a democratic system, because the next elections are going to be in 2-3 years. You are not going to win if you do that. And that is the essential conundrum of property taxation in India.
Thank you. Bridget?
I'll speak to two of the issues that came in the conversation just now. One is the issue of morality, and I just don't think there is any. The second issue in terms of bottom-up movements, I think, is an extremely important question. And I think the reason, part of why we're having this discussion, is because the pressures from bottom-up are so intense in the context of Asia. And I think that, if we look at the experience of Malaysia, 2 governments were kicked out over anti-corruption issues in unexpected ways and over issues of repression, and despite the oligarchic pressures to try to keep them in office. The fact most of these governments in the region are operating from fear and insecurity and a reliance on repression in some places, not all, but other mechanisms. And I do feel that we are in a region, when we look at Asia, of tremendous social transformations. And while we can look at why the super rich are there, everyone in the countries know and see the super wealthy, and there is pressure and demands to change that. And I think that this is what makes the politics so dynamic, and this is why we've seen such oligarchic pressures to make the regimes many more repressive. And you can see this in Myanmar as a classic example of this. I mean, the military have come back because it's about their wealth and their money, and they're killing people every day. And this is why these conversations are so important. We need to talk about and recognize that the people are fighting this system, and unpacking it helps us understand it. Thank you.
Pasuk?
Oh, I agree with Bridget that we can't talk about morality. People in power don't think about that in that way. But I will speak on the issue of bottom-up movement and crisis and crash of generations. Now, it is fascinating that a small country of Thailand has gone through kind of up and down in the political movement, almost like it's almost like the experience of the French Revolution. You know, you had the French Revolution in 1789, and then, you know, you think the ancien regime had collapsed, and then what do you get? You get the rise of Napoleon, and you know, so you have this zigzag of movement for a long time until France would sort of come round to establish a republic. Now, I have to comfort myself to think of that and to see the experience of Thailand as going through that a little bit. You know what I mean? That we can't expect to sort of think of a tangent of economists like to think of things moving in a, you know, progressive way, but it's not like that. You move back and forth. But the experience of Thailand also show that the bottom-up movements do work, and there are good enough people in the middle class as ideologues and who think about their fellow people and how they would like to see things change. And so, and we also gone through some crises as well. However, social movement alone is not enough. We need a huge crisis that would sort of woken up people and said, look, we need to change. And what it means is that the change will not be smooth. But I believe that at the moment there's enough, a lot of bottom-up movements, not only among the bottom 40%, but among, you know, the age, the people who have got old, and yet, you know, about 80% of them may not have any income to think about at all by getting old. And they form associations, and they're together with the We Fair movement that I was talking about, they are forming network and trying to nurture new political party with new ideas and completely new ideas. Although these new political party get back all the time, but I think we are going through that process, and the belief in the democratic movement, I think, is becoming stronger. So I have hope, but I am afraid we will have to go through crisis in order to get the land tax in place, because the resistance is very strong.
Well, let me thank all of the panelists for these very thoughtful comments, ending on sort of an optimistic but bittersweet note. I think we've had enough crises already, surely, to spurn plenty of social movements around the world. So thank you all very much for your participation, and special thanks to all the 5 panelists for really a very, very stimulating panel.